Welcome everyone to the second installment of Elliott Wave Waiting Pool. My name is Garrett Patton. Many of you know me on site as Shift 4. Now, originally from the first webinar, I got some feedback from people, so I'm going to change my webinar setup just a little bit, and I'm going to focus each one on a single topic, not try to fit so much information into a single webinar. So because of this, I hope that people continue to watch each webinar as they happen so that they understand the material that I've already covered, because I won't be able to go over the patterns every single time, and I don't want things to be too repetitive and too redundant. So if you could, hopefully go through the webinars as they progress, and I hope many of the people who are here tonight have seen the first webinar, since I won't be going over any of the original patterns. So with that said, the topic for tonight's webinar is going to be Fibonacci mathematics. I know some of you are familiar already with this. Again, I'm going to start with a little bit of the theory. Hopefully it's not too dry and boring, but it's something that I find fascinating and I think helps with your trading and your understanding of the Elliott wave principle. Then I'm going to go over how we apply it to our trading strategy, and then finally the end of the webinar will be the Adult Swim section, where we go over a real-time count. So to begin with, let's meet the man behind the numbers, Leonardo Fibonacci. He was born in Pisa around 1170 to Guglielmo Bonacci, a wealthy Italian merchant. He lived and worked in Bugia, Algeria, which was an important trading port connecting North Africa and Europe. His father was in charge of the trading post for Italy, for Pisa actually, in Bugia. So he had the task of maintaining relations with the Muslim authorities there, safeguarding the rights of the trading posts, keeping records, overseeing levying of taxes, etc., etc. So through this experience, Leonardo Fibonacci met a lot of the Muslim traders, and he recognized the efficiency and profit potential of the number system that they were using, which was the Hindu-Arabic system. At the time, most of Europe and, of course, Italy was using the Roman numeral system, and the number system that we are all familiar with, 0, 1, 2, 3, 4, 5, 6, 7, 8, 9, had not really been introduced or at least popularized in Europe at the time. However, the traders, the Arabic traders, were using this system, and Leonardo Fibonacci recognized the efficiency and profit potential of using it. So he published this in his famous Fibonacci, which is the book of calculation. And through this book is how the Hindu-Arabic system, the system we use today, really got popularized in Europe and got used by all the merchant traders at that time. Now, in his book, he expresses how he views arithmetic science and geometric science as connected. I think this is a very important part of Fibonacci mathematics, because we'll see how his discovery of the Fibonacci sequence relates to geometry in very significant ways. In his book, the Fibonacci, he presented a series of purse problems. They're dubbed by historians purse problems, to try to put abstract mathematics into everyday terms. So the purpose of his book was kind of to introduce these mathematics that he learned from the Arabic merchants and traders to European traders and merchants. So he wanted to present it in a way that was useful to them, something that they could relate to and understand given their nature and their business. So he tried to put these abstract and non-tangible mathematical problems into everyday terms so that they can understand them. They're dubbed purse problems, and one of those purse problems is how he discovered the Fibonacci sequence. Now, he didn't actually recognize the importance of the sequence when he made this discovery. However, the answer to one of the questions that he poses in his book, it's a simple problem that reveals a sequence of numbers which carry a profound importance in our universe. So the problem he poses in the book is how many pairs of rabbits placed in an enclosed area can be produced in a single year from one pair of rabbits if each pair gives birth to a new pair each month starting with the second month. Sounds a little bit complicated at first, but if we look at a graphical representation of this, we can see that we start with one pair of rabbits. It takes time for these rabbits to mate and to have their offspring, so 2 months. Second month, we get another pair of rabbits, then 2, then 3, then 5, 8, 13, 21, 34, 55. Now the importance of this sequence of numbers is the Fibonacci sequence. So each successive number is the result of adding together the previous two. Thus, 1 plus 2 equals 3, 2 plus 3 equals 5, 3 plus 5 equals 8, 5 plus 8 equals 13, etc. And this sequence carries significant importance as it is a governing property of numerous forms found in nature. For example, if we look at the branching of certain plants, they exhibit the Fibonacci sequence in the way that they branch out. So if we see here, it starts with one branch. At the first node, we get 2, then 3, 5, 8, 13. From the Fibonacci sequence, we can get the golden ratio, which is also of great importance, and that is found by taking any length can be divided such that the ratio between the smaller part and the larger part is equivalent to the ratio between the larger part and the whole. The ratio is always 0.618. It's a little bit wordy and verbose there, but here's a graphical representation of that. We take a length and divide it in such a way that the smaller part and the larger part are equivalent to the ratio between the larger part and the whole. Now this division is what is called the golden ratio. So the length of this side is 0.618 of the whole, and the length of this side is 0.382 of the whole. So I'm sure you're familiar with those two ratios, as they're very important in the Fibonacci extensions and retracements that we use in our trading. And that is basically how they relate to Fibonacci mathematics, is this property of the golden ratio. Now it's often denoted by the Greek letter phi, and it is an irrational number, a number whose decimal expansion continues forever without ever settling into a regular repeating pattern. An example of the Fibonacci sequence and ratio is Romanesco broccoli. You can see that the spirals exhibit Fibonacci relationships as well as the distribution of the cones on the Romanesco broccoli. Now this phenomena, the golden ratio, governs countless natural phenomena in nature. One such example is portions of the human body. This is the Vitruvian Man by Leonardo da Vinci. I'm sure you're all familiar with it. But if you take the length of from the tip of the head to the base of the foot and divide it on the golden ratio, you get right where the navel crosses. You can do the same with the arm proportions. If you see here, this is a 618 and a 382 relationship. You can do it again with the forearms or the hands. Basically, the way our body is divided up shows countless Fibonacci relationships based on the golden ratio. Another example is human DNA. The structural relationship between the spiral helix structure of DNA exhibits a 0.618 to 0.382 division, which is the golden ratio. So basically, it's nature's preference for efficiency, which consistently leads to dependence on phi, which has a mathematical property that results in optimized structure. An example is the human heartbeat. If we look at a graph of a heartbeat, the QRS and the T spikes also exhibit a relationship of the golden ratio. So it's found throughout nature, throughout man, and it's a very important ratio. There are variations of expressing phi, which also prove significant. You might recognize some of these numbers, 0.236, 0.382, and 0.764. These are reached by doing such thing as taking the square root of phi and doing other mathematical expressions of phi to reach these numbers. There is also human fascination throughout history with the golden ratio. The Great Pyramid in Egypt has a relationship of the length of this side of the pyramid to the base is a representation of phi. So although the aesthetic preference for phi is debated, there are countless examples of its use in architecture and art. I thought everyone would like this example. It is the Apple logo broken down into Fibonacci relationships. So many people use the golden ratio and Fibonacci mathematics when creating art or architecture because they think it has a pleasing aesthetic property. So people look at the Corinthian and feel that that was also built based on the golden ratio. This is the same rectangle we were looking at in the last slide where we have the division based on the golden ratio. And if you keep dividing these rectangles up based on that ratio, you get what is called a golden rectangle. So the golden rectangle can be used to construct a golden spiral. Go back to that first picture I had to show this. If you draw a spiral connecting the corners of the box in a golden rectangle, you get the golden spiral, Fibonacci spiral. These spirals are found in pine cones, seahorses, snail shells, mollusk shells, ocean waves, ferns, animal horns, seed arrangements, hurricane clouds, whirlpools, and galaxies. They're found throughout nature. Here's an example in a sunflower, in a hurricane, in a spiral galaxy, and a nautilus shell. They're found throughout nature because they are the primary form of growth and expansion in nature. And because of this, you can find expressions of the golden spiral or the golden ratio in practically every living form. So how does this all relate to the Elliott wave principle? So if we find that the golden ratio governs many relationships in natural phenomena involving growth and decay, expansion and contraction, and advancement and retreat, Corrective brings up a couple of questions in his writings that relate Fibonacci, the golden ratio, and the spiral to Elliott wave principle. And he asks, if phi governs and permeates the natural world, should it not govern and permeate the world of man? If forms throughout the universe, including man's body, brain, and DNA, reflect the form of phi, might man's behavior and mood reflect it as well? And if we view the stock market as a popular valuation of man's total productive capability, then we come to the conclusion that perhaps maybe the only difference between the mathematical progression of growth and decay in nature and in the stock market may be the manner in which they are presented. So in the case of the stock market as a line and the waves that we see in Elliott wave principle, in the case of branches as an advancing disk or as spirals or a circle in the case of hurricanes and sunflowers, etc. So through this connection, we come to the conclusion that the stock market is not actually a random formless mess reacting to current news events, but a remarkably precise measurement of the formal structure of human progress. The Fibonacci sequence can also be seen in the wave structure of Elliott wave principle. So the fractal price swings that make up the basic 5-3 pattern of Elliott wave principle create the Fibonacci sequence. I went over the 5-3 pattern in the first webinar, so I hope some of you saw that and are familiar with what I'm talking about. This is the 5-3 pattern right here. But if we break down price swings into the most basic form possible, you get a straight line. In a bear market, it's down. In a bull market, it's up. So that straight line would be one line, one line. If you connect them together, you get two. One move up, one move down. If we break it down into a little bit more complex structure that shows the fluctuation in markets, you get 3 price swings down in a bear market and 5 up. Connect them and you get our basic 5-3 pattern, 3, 5, 8. If you break it down even more, as we all know, and I discussed in the last webinar, that markets are fractals, so these patterns can be broken down on any scale. You get 5 down, 3 up, 5 down, total of 13 waves. In a bull market, you get 5 up, 3 down, 5 up, 3 down, 5 up, 21 waves. Add them together, 34 waves. Now, if you haven't picked up on this yet, you will notice that the sequence of numbers here recreates the Fibonacci sequence. So if we kept going and breaking down price swings according to the 5-3 pattern of Elliott wave principle, we would see that it continues out on the Fibonacci sequence. So why is this important? The 5-3 pattern is the simplest and most efficient structure that allows for both fluctuation in progress and price movements. And as we all know, nature always prefers simplicity and efficiency. So now we're going to get into how we trade these Fibonacci ratios and how we apply them to our trading strategies. The progress of Elliott waves has the same basis in Fibonacci mathematics as so many phenomena in life. The distance traveled by price swings and various wave patterns tend to relate to each other based on Fibonacci ratios, primarily phi. However, there are other relationships based on the phi number and different expressions of it, such as the 0.764, 0.236, and 0.382. So we use Fibonacci ratio price extensions and retracements to easily and successfully service targets when trading. The more confluence between these ratios, the higher probability the target. Fibonacci targets, along with wave patterns and technicals, can provide the basis for a profitable trading strategy. So you'll notice when Avi, Cow, I, or Arkady are putting out charts, we are always looking for confluence between the different Fibonacci ratios. We're drawing the price extensions and price retracements from various price swings, and when some of these fibs start to line up, that is the target that we look at as the higher probability of being hit. So now we come to Fibonacci Pinball, which is the bread and butter of Elliott wave trading and of Avi's method analysis. This is the classic impulse wave, which we are all looking for to trade when we use Elliott wave analysis. So in order to trade a 5-wave pattern using Fibonacci Pinball, what we are looking for is an initial 5-wave move up, followed by a 3-wave retrace, the classic Elliott wave basic pattern. When we see this, and we know that we have a wave 1 up and a wave 2 down, we can take the price extensions of the first wave up, measured from the very bottom where that wave starts, to the top of that wave, and project them from the bottom of wave 2 to get our pinball Fibonacci levels. So as a wave 3 of 5 moves through these different Fibonacci price levels, it reacts in a certain way according to where this price hits. So what we are looking for is the first wave of wave 3 generally hits at the 0.618 extension. It then retraces to usually the 0.50 or 0.618 retracement of that first wave of wave 3, and then it comes up in a wave 3 of 3 to hit the 1236 extension. Following that, we usually get a retracement back to the 0.764 or the 0.10 as a wave 4 of 3, and that is followed by a 5th wave and final wave of the 3rd wave, which tends to target the 1.618. So if you notice this happening in a price movement, if you see a wave 1 that is 5 waves up, a wave 2, and then you draw these price extensions, and as the price moves up through these fibs, it hits at these levels, creating a 5-wave structure within that internally, then you are looking at a very high probability wave 3. This is what we look for when we are looking for the Fibonacci internals, and when we say we like to see it hitting fibs. These are the fibs that, if they're hit and it's reacting the way it should off these fibs, then we know we're looking at a wave 3. And we can even use these fibs as entry and exit points on our trade as we're going up. So following the top of a 3rd wave, we usually get a retracement in a 4th wave back to the 1.0 extension. It can come down to the 764 extension, which would in this case be the level of the previous wave 4 of 1 lesser degree. However, if it starts to break down the 0.618 extension, that's when you know that your pattern, your impulsive 5-wave pattern that you were expecting, is starting to break down. This is the key retrace or the expansion level that Avi is always talking about when he is talking about patterns invalidating. Even if we do see this pinball moving up and this 4th wave starts to come back below the 0.618, that's a big red flag to start looking at an alternative pattern, and perhaps maybe this is not the 5-wave structure that you were hoping for. But if it is, if the 4th wave stops at the 1.0 or the 764, you will tend to get a 5th wave and 5 internal subwaves that targets the 2.0 extension. So just to run over that one more time, we get a 5-wave, wave 1 up, a 3-wave, wave 2 down, and then we are watching for the internal 5-wave structure of this third wave to hit these fibs. Wave 1 to hit the 0.618. Wave 2 retraces, the general retracement of a wave 1, which is 0.50 or 0.618. Then wave 3 of 3 should hit the 1236, pull back to the 0.764 in the wave 4 of 3, and the final 5th wave of 3 should hit the 1618. Now there is a slight variance to this structure. If you notice that these fibs start hitting at different levels, this is also a very common internal structure of a 5-wave pattern. So if that first wave of wave 3 only comes to the 0.382, then you're generally looking for the third wave of 3 to hit the 1.0. And then the 5th wave of 3 to hit the 1382. So that's something to watch for. If that first wave only hits the 382, watch the 1.0 extension first as the top of 3 of 3. Now wave 4 of 3 tends to retrace to the 764 or the 618. Again, if it breaks down the 618 level, then we start to get worried about our pattern, because that's our red flag, is the 618. So if our wave 3 tops at the 1382, then generally the wave 4 will come back to the 764 and the 4th wave of 1 prior degree. And then the 5th wave will target 1 extension lower at the 1764. So if anybody has any questions concerning Fibonacci pinball, go ahead and ask them right now. One question is, how do you know where to put the 0 line and how high to stretch it out? So when we are drawing these price extensions, what we're doing is you're taking your Fibonacci extension tool in your trading software platform, and your first price swing is the very start of wave 1. So wherever that bottom was, there should be a wave coming down here to create a bottom. So your first price swing is that very beginning of wave 1. Then your second price swing is the top of that wave 1. So you're measuring the length of this first wave. And then your third price swing is the bottom of wave 2. So you're taking this length and projecting it from the bottom of wave 2. So this 1.0 extension is the length of this first wave. Does that make sense? Another question is, wave 4 can go sideways too? Yes, generally the second wave will be a zigzag, and the 4th wave will be a flat or triangle. 4th waves do tend to have a more flat and sideways structure in comparison to wave 2s. So that's good to point out. It's not necessarily represented graphically here, but maybe this price swing here would come down a little further, this one would come up further, and we'd get a more sideways flat structure. So are there any more questions before I move on Fibonacci pinball? All right. If not, then I will start on the Adult Swim portion of this webinar. So here's the chart we're going to be going over today. Let me take this extension off. So right now we have a corrective pattern coming down into a low. So we have 3 waves here. So I'm looking for a low to come down. Hold on, I'm getting some questions. Let me pause for a second. Can you give a real-time example of building a wave pattern? Example, the ES during today's trading. Well, I'm actually going, that's what this portion of the webinar is. The Adult Swim portion is me doing a real-time count. So I'll be using the Fibonacci pinball as I go through this. So we'll go step by step as if this chart was, playing out in real time, well, accelerated time. And I'll show you how to trade it and how to do a count on it as it progresses. Another question is, do you calculate the bottom of the first wave of wave 1 as the bottom of an uptick of the very price bottom? Yes. So you're not using the close levels, so these little ticks on the side, you're using the absolute low or high. This chart is PHM. Please see my request above. Can you do this? J. Michael. Please publish an expected or most likely fib extension for each wave as a table with wave number and fib extension. I can go ahead and put that together for the next webinar. I believe that in Avi's first webinar, in the webinar section, it does have this table, but I'll be happy to put it together for the next one. So back to the chart. What we're looking at here is a corrective pattern, hopefully. We're looking for a bottom where we can start our trading moving up. As you see, this is 3 waves. Hopefully you guys watched the first webinar where I went over some of the wave patterns. But what we're looking at here is a wave A down, a B wave triangle. If you guys can see that here. A B wave triangle where we have an A wave, B, C, D, E. And then now we're looking at a C wave down into a bottom. So the first Fibonacci price relationship we're going to look for is between the A wave and the C wave. So what we do is we take the swing from the A wave high to the A wave low and project it from the top of the B wave. So right now it looks like this price bounced off the 618. However, if you look at the internal structure of the C wave, it looks like this is just the bottom of a wave 3. The wave 3 of 3 tends to have the strongest technicals. So if you see here, the MACD is at its lowest right here. So generally we can look at this as a wave 3 of 3. Put these labels on here so you understand what I'm talking about. So because I'm expecting one more drop here in this 5th wave, I can use the Fibonacci Pinball to try to calculate where it's going to end. So if you notice, I took the top or the beginning of that first wave to the end of it and then projected from the start or the end of wave 2. So if we notice this Fibonacci Pinball through here, so far it's looking nice. We have the wave 1 hitting the 618, which is what we're looking for. The third wave extends way past the 1, 2, 3, 6, which was where it generally would. You can see price extensions, but it still should hit a fib, and if you see here, it does hit the 2382. Get a 4th wave pullback, and then fifth wave that extends just past the 618. The 618 lines up with the 618 of the A wave, so we got some confluence there. So as we move through this chart, we're expecting a 4th wave to come up here, usually around to the wave 4 of 1 lesser degree. And that looks like where it's stopping here. Looks like we might be getting a diagonal down, and it comes just below our previous low here and starts to reverse back up. So I'm going to label this as the bottom of our wave 5, and this is also a C wave. So we're looking for a bottom right here, and to start trading long to the upside once we get confirmation. Now confirmation, again, is that initial 5 waves off the low and then a 3-wave retrace. That would be a wave 1 and 2, and then we can start trading the Fibonacci Pinball of the wave 3. I'm going to look over here at some questions real quick. Could you please use a larger font for the wave number? For these ones? Is that a little better? The only problem is I have to go through and change all of them. More questions. Sorry if I missed this, but why did you start with wave A instead of 1? The reason I did is because I was expecting a 3-wave retrace here. I was expecting this to be a corrective pattern. So for 3 waves, that's an ABC pattern. I'll try to label these with the same labeling system. So you're looking at the same degree. But the point is that this was supposed to be a 3-wave corrective pattern, is what I was expecting here. So the move up looked impulsive from this last low back here in the chart. So we were looking for some, fib confluence down here, looking for a bottom. We have our C wave down. 5th wave is on some nice positive divergence. This is where I'm looking for us to bottom right here. What made me think it was corrective? The reason that I look at this as corrective is because again, I don't have the the previous data on this chart. Sorry about that, but maybe it's on this one. No, that's the other one. Okay. But the move up before this looked impulsive into this high. Wave 3 is supposed to go upright. What you're showing here is 3 is going down with its 5 waves. The 5-wave structure can be either up or down. It's always going to be in the same direction as the trend of 1 larger degree. So this degree trend, this 5-wave structure, is going to be in the same direction of this larger degree trend. I'm assuming you apply the fib pattern to C because it's the first wave with 5 waves. Yeah, it looks like this A wave could be broken down the same way into 5 waves. Let's take a look. Yeah, we get nice relationships here. I mean, it comes a little further to the 764, but then to the 236 down to the 1618. So this should be a 5-wave structure here too. A nice little 4th wave triangle and a 5th wave. So what determines whether waves are going up or down? Well, what you're looking for is obviously the trend on a larger degree chart, and then you're looking for the 5-wave substructures. So the rule is that any 5-wave structure you see is always going to be in the same direction as the trend at 1 larger degree. So we see a 5-wave structure here, and you can see it's part of this larger downtrend. So 1 larger degree up, it's part of this larger downtrend. Same with this 5-wave structure here. Could you comment on the relationship to the A to C, as A is much longer? Generally, you're looking for the 1.0 relationship, is the most common relationship between an A wave and a C wave that you'll see. However, because this B wave was a very shallow retrace, as it was just a triangle, it meant that this C wave wasn't necessarily going to come down as much because this is correcting the larger move up back here. So I saw 5 waves in here. It came to the 618 extension, so I'm looking at this as a possible bottom. Usually it'll come to the 1.0, but because this B wave didn't retrace much of the A wave, that's my guess why this C wave wasn't nearly the length of the A wave. But basically you're just looking for these Fibonacci relationships between the A and the C wave. You're looking for a 618, 764, 1.0, and they go on, on these numbers too. Does a triangle always break in the direction of the trend? Yes, a triangle is a signal of a trend ending, actually, because it always precedes the final move. So the final move would be the C wave in the case of this B wave triangle, but a triangle always precedes the end of a move. And when you see a triangle, you should be expecting one last wave in the same direction of the larger trend. In this case, a C wave, because triangles are always in B wave or fourth wave positions. Do you always have the chart in a pattern of some kind, or is there just some slop in a trend that doesn't fit anywhere? There's never any slop. You always need to account for all the different price swings in an Elliott wave pattern. So in this corrective one, we saw wave 1 down, then a 5-wave structure of a third wave, a fourth wave triangle, and I mean, this looks like a diagonal maybe. It's not the cleanest, but you get the idea. As a fifth wave. In our B wave, we have the A, B, C, D, E structure. If you watched the first webinar, you know that B waves are broken into 5 waves. A, B, C, D, E. This one is of the contracting variety. And then we have a final 5-wave move down in a C wave. Wave 1, 2, 1, 2, 3, 4, 5 of 3. Wave 4, and then a 5th wave down. So as you can see, all the price swings in this entire move are accounted for in our Elliott wave pattern. I'm not just skipping any of them and saying, well, this doesn't fit. So you need to make sure that you're accounting for all the price swings and that they do fit some sort of pattern. Are there definite rules for triangles? Are comments that many times what looks like a triangle isn't. There are rules, and that is that a triangle should have 5 waves, A, B, C, D, E. If it's contracting, each successive wave should be less than the previous one. So the contracting variety, this wave can't, well, the B wave is an exception. The B wave can exceed the start, but the C wave can't exceed the A wave. The D wave can't exceed the high of the B wave, and the E wave can't exceed the high of the C wave, if that makes sense. So the contracting variety, they have to actually be contracting into a single point. They should have Fibonacci relationships between the price swings as well. Usually it's 0.618 of the previous price swing. So this one should be 0.618 of that. This one 0.618 of that. This one 0.618 of that. Okay, I think I covered all of the questions. If I didn't, just go ahead and ask it again later. So I'm looking at this as a bottom. I'm going to go to this chart as it's a little bit closer. So what I'm looking for now is 5-wave structure up off of this bottom that we just saw in the last chart. So right here, I think this looks like a possible 5-wave move up and then a 3-wave retrace. So I'm going to draw the retracement fibs, and as you can see, right now it has stopped right at the 0.50. So we might actually be looking at a wave 1 and 2 off the low. And this is what we want to see in order to go long with confidence. So if I'm an aggressive trader and I see this, a possible 5-wave move up, followed by an overlapping 3-wave retrace that stops at the 0.50 or 0.618, I can take a long entry here. And then set my stop just below this last low. So if I get long, around here, then my stop will be just below this last low. So far, this looks really good as the start of our 3rd wave. You can see we're exceeding the previous high. So I'm going to draw the pinball fibs moving up so we can watch as this potential third wave progresses. So generally we're looking for this wave 1 of 3 to stop at the 618. I'll pull back in wave 2. Then we're looking for the wave 3 of 3 to go to the 1, 2, 3, 6. I'll pull back in between the 1.0 and the 764 and the wave 4 of 3. Wave 5 of 3 should hit the 1618. So label these, give me a second. So wave 5 of 3, the top of wave 3 off the low should be at the 1618. The wave 4 should retrace to the 1.0, and then the fifth final wave should target the 2.0. So I can draw these even with just this much information, this much price information, a possible wave 1 and 2. I can draw these fibs, put these numbers on here as a general guideline for my trading. So if I did go long here, and my stop was just under wave 2, what I would probably do is target and look to take profits around the 1.618. Or 161.8 at around 6 here. I'm going to read a couple more questions. 1 second. If you can, it would be great to comment on the divergence in the technicals that accompany waves 4 and 5. Sure, I can do that. What you'll notice on a wave 4 is what is called hidden divergence. So you'll notice that this MACD made a higher high than this pullback up here, even though the price actually made a lower high. Yeah, that's not actually a great example. Here it is. Okay. Here's the hidden divergence that you'll see in a fourth wave. So when the wave 2, this is the MACD on the wave 2 of this 5-wave structure down. The fourth wave will tend to set up hidden divergence, which means that even though it's making a lower high than that wave 2, the MACD is making a higher high. And that basically just, it means that we'll see one more wave down, but it also means that it's setting up positive divergence on that last low. So that's generally what you'll see in the technicals for wave 4 and 5. Do you often find stocks that are not following your projected fib pattern? It seems like Facebook is not following a wave pattern that has been projected, or do we just need more time for it to play out? Concerning Facebook, I think we just need more time, but if something is not following your fib structure, if it's not hitting fibs on the way up, then that probably means you're not looking at the correct pattern. That's why Avi always talks about proper Fibonacci relationships within the substructure of waves. If it's not hitting fibs as it goes up, if it's not playing well with fib pinball, then you're probably not looking at the right wave structure. Facebook, if you go back and look at that chart, you'll notice that on the move up, it actually does hit the fibs and plays fib pinball well. We're just in this fourth wave part here, and we're waiting for this fourth wave to complete. Wave 2 can retrace up to the wave 1 start. Correct. So this second wave technically can come down all the way to where wave 1 started. However, it cannot exceed it because then it's not making progress moving upwards. So I'm going to get back to the chart here and try to go through this price. So again, we're expecting wave 1 of 3 to stop at this 618 retracement. Let's see if it happens. So far, so good. Getting a little bit of a retrace and a nice move back up. This might be our wave 2 of 3. So now we're expecting a strong price move that will come up to at least the 1, 2, 3, 6. Again, since wave 1 of 3 hit the 618, that generally means that wave 3 of 3 will hit the 1, 2, 3, 6 or the 1, 3, 8, 2. So I'm still long from my entry back here. Until this high is taken out, significantly, I'll keep my stop under this wave 2, but once it's taken out, and I'm pretty sure we're in a confirmed wave 3 up, I move it to the bottom of this 2. And then eventually I'll move it to the 618, because as I mentioned before, breaking down the 618 is our initial signal that perhaps this isn't a 5-wave impulsive move up. I am going to leave my wave. Somebody asked, why don't you leave your wave labels in place to see how accurately the actual data matches it? I am. I place them at these fib levels. The timing, I'm going to move them under the waves. The timing has nothing. I just place these, in a general timing path. I have no idea if it's actually going to hit here. This is the price I'm expecting. The timing has nothing to do with it. So if the fibs are hit, I'll move the labels to, where that turn actually happened. So again, expecting a strong move up here to the 1, 2, 3, 6. So far, so good. I am long. It looks like this one stops short. Unless this is a 1, 2, 1, 2 setup. Technicals are still good, but remember the wave 3 of 3 can hit the 1, 0. It's generally not what you see if it hits the 618 first, but it can happen. As long as these waves don't overlap, as long as this fourth wave doesn't overlap the top of this wave 1, we're okay. So this is actually what we might be looking at here. Again, my stop, since we exceeded this price high, is now under this wave 2. At that point, it's probably break even right now, or whatever I entered at. But right now I'm going to label it, the structure as so. We now hit the 1, 2, 3, 6 exactly on the nose, but we only have 3 waves in this structure, so I don't really think that's the top of wave 3. We could be getting a condensed wave structure here. We're seeing a little bit of divergence, so far at least, on the MACD and on the other indicators. So you tend to see the strongest technicals on the wave 3 of 3. So this might be the wave 3 of 3 right here. We're seeing some divergence. It is hitting the fibs on the way up, which is good. It's showing the proper wave structure internally, which is good. So far, I don't think there's anything really to worry about. At this point, I would move my stop to just under the top of wave 1, because these waves can't overlap. So if this is really the top of 3 off the low, this fourth wave cannot retrace past the top of this wave 1. So my stop is now just below this high. So it looks like we are getting a wave 4 back. Generally it'll retrace to the wave 4 of 1 prior degree. So far it looks like that's what we're getting. We may have stopped here. So because this third wave stops, far below the 1618, which is the general extension that we see, I'm not going to expect this fifth wave to move up to the 200 extension. Instead, I'm going to expect one of these two, either the 1618 or the 1764. So we get a nice spike there to hit the expected fib. It does so. This is where I would have been taking my profits as it came up to this fib. Wave 5, negative divergence, as you can see. This looks like a nice 5-wave structure that's complete. I would have taken profits. I probably would have taken off my entire position, since right now I'm expecting, a retrace that'll take me at least close to back to where I entered. Sometimes it'll take off without you, but then you can just get in on the next retrace after that. But I've taken profits on my trade, and I'm looking for a retrace to the 5-0 or the 618 in a wave 2. So I'm going to mark this as the top of my wave 1. I'm looking for a 3-wave retrace down as a wave 2. I'm going to stop here to answer a few more questions. What time frame is this chart? If you can see up here, it's a 120-minute chart. So this, first wave took from October 3rd to November 8th. I did move the price of wave 3. I'm not saying that Fibonacci pinball is a fail-safe method and that every single wave structure, internal structure, is going to hit the exact same fibs every time. It's just not how the market works. The market likes to be variable, obviously. I'm sure all of you are aware of that. But what I am looking for is the price swings to be hitting the fibs and maintaining a proper internal structure. So I was looking for 5 waves in this wave 3. It didn't overlap. They didn't in this case. They hit on fibs. This looks like a solid 5 waves up to me. It didn't extend to the typical targets that you normally see in a 5-wave pattern, but it doesn't break any rules. It's hitting fibs. Technicals match. It looks good to me. I think that this is a high probability setup. You can get long on this wave too, I think, with high confidence. Do you factor in filling of gaps when it comes to fib retracements? I'm looking at patterns only. So if there's a gap, let's say there was a gap up in this wave 3 that was right here, I would not expect it to be filled in this wave 4. Why? Because this wave 4 can't retrace past the top of this wave 1. If it does, this is not a standard impulse wave up. So you have to pay attention to the price patterns. That's why I think that it's dangerous when you see gaps to think that price immediately has to come back and fill them. Price gaps do tend to get filled. However, the market can take as much time as it wants, moving in their direction upwards or wherever that price gap broke out from, before coming back and filling it. So you can see price gaps get filled a long time down the road. Could you slowly show how you place the last fibs? These wave 2? The wave 2 fibs? The wave 2 fibs, the retracement fibs, I'm just looking for the retracement levels of this entire move. So from the bottom to the top here. So I'm using my retracement tool, measuring from the bottom to the top. I have profiles set up for my retracements. And this shows me, this would be 61.8% of this whole move. This would be 76.4%. And this would be 50% of this whole move. If the wave retrace goes beyond 50%, do I start to get concerned? I start to get concerned if this wave 2 came past the 618. That's when I would start to get concerned, especially if it was looking impulsive down. The wave 2 tends to retrace to the 0.50 to 618. So those are the fib support levels I watch first. Wave 4 retrace should be either 38% or 50%, correct? A wave 4, this fourth wave tends to be 3.6% of the third wave, or 38.2%. This one probably retraced a little more. Yeah, it did. But you're also looking for it to come back to the wave 4 of 1 prior degree. So fourth waves, you're looking for a retracement to the wave 4 of 1 prior degree, or the 382 or 236, generally. Hi Shift, you may want to tell people to go take a look at the current Dow 15 or 60-minute chart. It shows a very good example of how 3 extended to the 1236 instead of the more usual 1618. That's good to point out. If anybody wants to go look at that and throw some extension fibs, they'll see what Roy's talking about, how sometimes we don't hit these standard extensions. What we're looking for is the pinball moves, the bouncing off these fibs following standard structure. It doesn't mean that we'll always target the same spot, but we do have general targets that we're looking for that waves tend to hit. So I'm going to continue on this count here. We're looking for a wave 2 pullback. It should be in 3 waves. Remember our basic 5-wave pattern followed by a 3-wave retrace. That's what we see when we see wave 1 and 2. So I'm going to move along here. So far this is good. We're getting overlapping patterns, which is what you want to see with a corrective retrace. There's a lot of overlap. This looks like it may even be an AB, and now this is a C wave down. So right now I'm drawing fibs to look for relationships between the A and C wave. Let me throw the 2.0 on there. So it looks like the 2.0 comes just past the 50. I think right now I'm going to be watching the 0.50 retrace for my wave 2 to stop. Could have fallen short. Another fib to watch on a wave 2 retrace is the 382. We did get an extension, price extension here of the A to C to the 1236. It came almost to the 382. There was some positive divergence on that low. If I saw this pattern happening in real time, I might take a long here on this day and set my stop just below this last low. So let's say I go long here. Stop is just below this last low. So far so good. We're exceeding the previous high. It looks non-overlapping, a nice impulsive structure. We can start drawing our larger pinball fibs. So, squash this down a little bit. So again, I'm just going to place my labels at the standard targets for Fibonacci pinball. Oops, that's the third wave. So if you guys remember, the wave 1 of 3 should come to the 618 or the 382. Should retrace 50 to 61% of that wave 1. The wave 3 should come up to the 1236. Wave 4 should come back to the 1.0 or the 764. Wave 5 of 3 should hit the 1618. Then we'll generally see a pullback in the larger wave 4 to the 1.0. And then our 5th wave at the 2.0. So again, just with this price data right here, this initial wave 1 and 2, I have a general roadmap that I'm going to watch for price to follow through as to tell me that, you know, I'm looking at the correct count, and this is in fact an impulsive wave moving up. So I'm long again. I got long right around here. Stop is just below this 2, this last low, and I'm looking for a target of 950. My entry was just around 6, let's say. It's a nice sizable move. I'm going to look at some questions here again. What does positive or negative divergence mean? Positive and negative divergence is when the price swings are not matching up with the price high and low are not matching up with the high and low of the technicals. So an example of divergence would be this price high, which is higher than this price high right here, has lower high on the technicals. That's what's called negative divergence. So this usually means that momentum is starting to wane and tends to happen at tops. Positive divergence would be when a lower low is made, but there is a higher low on the technicals. For example, this low and this low. The technicals had a lower low than a higher low, but this is a lower low on this low. So there's positive divergence here. Love just brought up a good post. She posted earlier today on a tutorial for divergences. So if you go back and look through her posts, Love My iPad, she has a nice video of divergences that you can watch, and it will probably explain a lot better than I just did. How does the A wave of 2 have 3 waves? It looks straight down. The A wave doesn't always have to be a 3-wave structure. In a zigzag, you know what? I actually probably drew this wrong. The B should be there. So in a zigzag, you're looking for a 5-wave structure, followed by a 3-wave retrace, and then another 5-wave move down, ABC. So it's 5 waves, 3 waves, and then 5 waves. It's a classic zigzag, and you'll see those most commonly in a wave 2 position. So that's what we have here. I mean, this is just one price drop, but because of that, we can assume that it's 5 waves. Then we have a B wave retrace, and then 5 more waves as a diagonal down to end the C wave. This is what is called a zigzag correction. If you haven't watched my previous webinar, I go over most of the patterns in it. The next webinar I'll be going into a lot more detail of all the patterns. That will be the topic, is different patterns. But the A wave doesn't always have to have a 3-wave structure. Mention that MACD is 2 different moving averages. Well, I guess I just did, but that's how the MACD is calculated. Could you state again what you're looking for wave 2 retrace? Was that a wave 4 of a previous degree? That's a general rule on retraces, that you're looking for a move to the 4th wave of 1 less a degree. So in this case, it would be this low right here. That's most commonly seen in 4th waves rather than wave 2. So what I'm looking for on a retrace, a wave 2 retrace, is a retrace to the 0.50 or the 0.618. Now in the case of this retrace, we didn't come down quite that far. It only came close to the 382. Usually that's a bullish sign. When it doesn't retrace as much, and you have a 3-wave structure and price starts to move up from there, it's a bullish sign. It's a good indication that you're about to see a 3rd wave up. But that's generally what I'm looking for, 3 waves into fib support. I guess the issue is if I want to set up a long trade for the target of wave 5, at what point can I have confidence in the target? If you're looking at options, let's say, if you're going to trade this using options, what I tend to do is I buy a strike at the wave 3 of 3. So I'm looking for a strike around here. You know, as long as open interest and implied volatility say that that's a good strike to pick. I usually try to pick if I'm doing out of the money options, I'll look for the strike around the wave 3 of 3. Even though I'm going to hold it for this, I'm usually looking for this strike. You don't want to pick a strike that's at your highest target, because you'll get into trouble that way. 1, if it doesn't get hit, or 2, if it takes too long to get hit. And then I'll tend to buy a month longer than I'm expecting the move to happen. So just, I just place these out here. This first wave took a little more than a month. Generally, I'd say I'll give this third wave 2 months. So maybe I'll buy my option with 3 months of time. That's generally how if I'm doing just straight calls and puts, that's how I'll look at it. But when do I buy it? I buy that option on this wave 2 retrace. So I have a confident 5-wave move up, a corrective retrace. As I said, I entered long at around 550, or let's say even 6. Oh wait, we're not at 6 yet. I entered long around here because I saw a 3-wave move that held support and then reacted strongly off of it. So this is the entry you're looking for. You're always looking for 5 waves and then a corrective retrace for a long entry. So I would have bought my option around here. All right, let's continue to go through this count. So again, general roadmap. This is the price swings I'm looking for. I'll be watching the 618 first. Looks like it may have come just shy of it in between the 5.0 and the 618. This does happen. Sometimes I see the wave 1 of 3 hit the 5.0. It's not as common, but it does happen. And this didn't hit a fib directly on. So if this third wave doesn't hit a fib directly on, then I'll start to get a little more cautious. But it should, came almost to the 618. My stop is still going to be under this wave 2 here because I'm expecting a stronger move up. So even if this does retrace more than expected, I don't want to get stopped out. I'll give it a little bit of risk because, I'm looking for a much more sizable move up than what I'm risking with my stop. So if this is the top of 1, you can look for a wave 2 retrace. I'm going to use these, since the last wave 2 only retraced to the 382, I'm going to throw that one on there too, just in case. But still expecting the 5.0 or the 618 in 3 waves. Looks like we have a first wave down. This would be a B wave retrace. We get a spike down here to our 618. As long as this level holds, ideally in the bullish count, this 618 will hold. And we'll see a reaction up in the third wave from there. So far, as you can see, it hit that 618 on the nose. It's held so far. We have a nice ABC structure. I'd actually probably move this B wave to this peak, since otherwise the C wave would only be 3 waves. So we have a 3-wave A wave, A, B, C, and a 3-wave B wave, A, B, C. Might even be a triangle if we looked at it, in a smaller time frame. And then what I can assume is a 5-wave move down as a C wave. It held support at the 618. Price is turning up. I'm zoomed out far enough that I can't really see any divergence. Oh, there is some divergence. Okay. If you look here on the composite index, you can see some nice divergence on that C wave. This is all what I'm looking for in a bullish pattern. Wouldn't it be better to buy the long at the completion of C of 2 with the strike of 3 projection? The C of this 2? Or the C of this 2? It all depends on your risk tolerance. A lot of people like to see that 1-2-1-2 setup and just trade this third wave, which is fine. But if I see a 5-wave move up and then a 3-wave corrective retrace, I'm doing my long here. That's just my risk tolerance and how I trade. So I would have taken the long position around here after it reacted, positively and looked like price was turning up, and then set my stop under this low. But you, of course, are welcome to wait for that 1, 2, 1, 2. Buy it here. You know, in the end, you got around at the same price I did. So it's not necessarily a worse strategy. It's just, you know, different people trade different ways. So if you want to get on this wave too, on the C wave down, nothing wrong with that. And then your option strike, if you're doing that and you're trying to play up here, again, I would pick this third wave and get a little more time than you're expecting. All right, so we're reacting off this fib, the 618. Everything's looking good for this move up in the third wave, and I'm expecting it to come up to the 1, 2, 3, 6 extension. I'm still long. I'm going to wait for price to take out this high to move my stop under this wave 2. So right now my stop is still under here. Once this high is taken out, then I'll move it up to just below this level, which will be about break even is my guess. So it looks like we did have a 5-wave pattern if the B wave is here. It retraced a little lower than hoped. Didn't come to the 764. But, you know, again, my stop is down here, below this. A wave 2 cannot retrace all or past the beginning of a wave 1. So this 1, 2 setup, this 2 can't come below here. So this is my stop down here. I'm still long. And so far price is reacting positively upwards. Looks like this is a good start. You can even do pinball on the internal 5-wave structures. I'm going to move these labels around a little bit because it's obviously going to take more time than I originally anticipated. So again, this is the path, the general roadmap that I'm looking for. I'm still looking for that wave 3 of 3 to come up to the 1, 2, 3, 6, right here. This looks like the low of 2. And now this is a very good sign. If you can see, price is moving up very strongly. We don't have any divergence. Well, there is a little divergence, but it looks like it's going to get taken out. Unfortunately, timing is not a strong point of VW, so I'm a lot of times moving labels around. But I'm looking at the price levels, not the timing isn't really a concern of mine. I mean, obviously it is with options, but that's why I like to buy extra time. So right now we have the 1.0 extension getting hit. We don't see any divergence on the technicals, on the MACD at least. This is a good sign that this is our wave 3 of 3. We don't want to see any divergence here. Remember the third wave, this wave 3 could stop at the 1.0, but I'm expecting the 1, 2, 3, 6. Could stop here, I'm expecting here. Couple questions. If a wave 3 blows through the 1618 like today, should you jump ahead to the 2618, 3618, etc.? And which fib pinball do you give more authority to? The immediate or larger wave degree? Thank you. The larger the wave degree, usually the more important the fibs are. if it does blow through, if you get extensions and you're moving through the 1.3 or the 1.618 on the wave 3, then you just want to keep moving up on your fibs as your next resistance levels. I have noticed if the 2.0 gets hit on a wave 3 top, then the wave 5 is generally going to target the 2.618. So you'll notice as you're doing these through 5-wave structures, and you start doing it a lot, you'll find some tendencies. You know, if this fib gets hit, what to look for as the next target. Do you consider taking profits when wave 1 of the larger wave 3 hits your fib target with the intention of reloading at the bottom of wave 2? Right, so in this first one, when I decided to go long back here, I took my profits up here because I was expecting a retrace. In the case of this one, it did hit that fib on top there, so I might have gotten out close to the top, but my entry was not too far away from that, so I didn't necessarily gain much by doing that in this case. If I was playing options, you know, obviously would have saved me some time decay. But if you want to keep on, you know, partial position expecting a wave 2, you're always welcome to do that too. What are the two tech graphs below the MACD? This is a combination of stochastics and RSI, and this is the composite index. Stochastic RSI, I usually find that the swings happen, you know, in tandem with the price swings, and then I watch this one for the divergence that I can't see in the MACD. But generally, you know, MACD is what I'm watching, especially for confirming wave 3. So the wave 3 of 3 should have the highest MACD reading. So that looks like a fourth wave. So right now this is my labeling of this. I'm still expecting the top of this wave 3 of 3 to hit at this 1, 2, 3, 6. It looks like we have a 1, 2, 3, 4, and we're working on our fifth wave of this wave 3. And again, I'm targeting here. Conservative traders will want to take some profits here. You don't necessarily have to take all of your position off, but, you know, take a third or a half off at the 3 of 3. That's what I do sometimes, you know, because sometimes it just reverses and the pattern breaks down. So it's always nice to, you know, have a little bit of profit. You don't have to take the whole position off because, of course, you can target these higher levels, but take some off. This is overlapping. This is looking like a fourth wave. Of a certain degree. I'm thinking it's this fourth wave, or this third and fourth wave here, to be honest. Because the reason I'm thinking that is because it hit this fib, which is part of this wave structure, not this larger one. So to stop here in this wave 3 and not hit a fib would make me worried. So I'm looking at this is the top of the wave 3 here. Because it hit the 1764 on this fib. And yeah, this looks maybe that. Looks like a triangle. You can see this triangle structure, A, B, C, D, E. Everybody can see that. So yeah, like I said, let's say I did take profits. I said at this peak. So if I took profits here, then the stop for the rest of my position would be below the 618, this red 618. Because that's when that breaks down. You know, I might set it, you know, just below this high of this wave 1. So when that breaks down, that's when you know that you're not going to get follow through on these upper waves you're expecting. So right now our price is sitting right at the 1, 2, 3, 6. It's my expectation for the top of this red wave 3. Let's see if it stops there, or if it extends to the 1328, or 1382, sorry. So it looks like we're breaking up through it. Interesting. So it looks like I may have actually labeled this incorrectly. Because we're coming up to the 1618 here. There's a little bit of divergence. Again, this was my target for the top of 3. I would have taken the rest of my profits. It didn't quite hit it. So, you know, I probably would have been following up with a stop and then got stopped out. You know, maybe on this spike down here. So I've taken my profits on my long trade that I entered right back here. So I entered around, let's say 560 and took first profits at 750, and then my second profits were taken around 850. So not too shabby. Again, it's not hitting perfectly, but you know, no, I think I was right the first time. I'm going to keep this labeling because the wave 3 of 3 of 3 of 3 should have the highest technicals. I mean, if you break it down, I'm going to go back to this labeling. Sorry about that, guys. And that would mean that this is extending. So if that is happening, then this wave 4, since price is extending a little bit, I'm looking for this red wave 4 to retrace back to wave 4 of 1 prior degree in the 382, so around this level in an ABC. One question was, E of the triangle looks like a low-risk, high-probability entrance point that can be predicted when D turns. Yeah, I trade triangles, especially large-scale ones. What you're ultimately looking for in a triangle is your E wave. You can take the position there, you know, when it hits the bottom bound of the triangle. And then you set your stop. You know, if you're really conservative, it would be below this last low, which would be the D wave. Or if you want to give it a little more room, then you put it below this A wave low. So that would be where your stop would be on a triangle trade. And then you're looking for that previous high to get taken out. So you're looking for this D wave high to get taken out as confirmation and a breakout of the triangle bound. So back to the chart. Because of this, the wave 5 will probably hit 1 fib up higher Again, I don't have a position now. I took my profits up here. I'm looking for a wave 4 retrace that looks corrective. Comes down to either this 382 retracement, or it could come down just a tiny bit below that to the wave 4 of 1 lesser degree. If it breaks below this 764, that's when I'm worried. So if I do take position, I'll set it at the 764 if I want to give it more room. If you're more aggressive, the 618. So let's watch how this progresses. Looking for 3 waves down. Looks like we might have an AB so far. The A wave would be 3-wave move. The B wave, 3 waves. And then our C wave should be 5 waves. The most common point for it to end is the 1.0. The most common relationship between an A wave and a C wave you'll see is the A equals C at the 1.0. This also lines up for where we tend to see 4th wave stop, which is the 1.0. The 382 is not far below it. So right here, this is what I would call confluence or fib clustering. Right here is a very high probability turning point. I'm expecting price to come down here. I'm going to get long right here. And I think it's a high probability setup. And I'll set my stop if it does happen, price comes down, I get long, I'll set my stop again just below the 764. Man, this one does not like to retrace to normal levels, does it? So let's say I missed this entry. I was watching for it to come down here. Didn't come all the way down. I'm not long. It's not the end of the world. I can, look for again on this 4th wave retrace, this larger one, to get long. I'm not somebody who likes to chase price. So if I don't get my entry and price just immediately starts reversing, what I expected, but from a much higher level, I personally don't chase, and I'll just wait. I missed this wave, but I can get on the next retrace. I want to see high probability setups where my stop. See, if I get right here, if I got long right here, my target is the same as my risk. And that's not a good ratio to me. I don't want to be risking as much as what I'm potentially making. So this is not something I would enter long here because it didn't come down to the proper entry point. As, of course, if we are in the 5th wave up. But it looks like that, so. All right, so that wave 3 might have hit on that 618 fib we were originally watching for. So what we got was a very extended 3rd wave of this 5-wave internal structure, the red one. We got a very extended 3rd wave in that. And then a smaller 5th wave. There is a relationship that tends to happen if you get an extended 3rd wave. This is a guideline you can use, and that is that wave 1 and that wave 5 will tend to equal the same distance traveled. So if I draw fibs for that, let's see what happens. So you see here that 1.0 is exactly where it topped. So you can use this guideline a lot of time. If you see an extended 3rd wave in the middle of a 5-wave move, measure the 1st wave, project it from the bottom of the 4th wave, and you'll tend to see the 5th wave equal the same as the 1st wave. The other relationships you're looking for, if it doesn't hit that, is variances of 618 of phi. So if this got passed, we'd be looking at the next one up, which is the 1618. And there's nice confluence here. So if this kept going, this would be my next target I'd be looking for. But again, I'm not long. It didn't hit my ideal entry. I'm waiting for this fourth wave pullback now in order to enter. So again, you're looking for a fourth wave to retrace. If it hits the 618, or the 1618, you're looking for it to retrace to the 1.0. So that would be right down here. And if it stops directly at the fib, then what you'll see is that is the same as the 382 retrace, which again is what a wave 4 tends to stop at. So right around here is again what I'm looking for my entry. Because the retracements in this wave 2, this wave 4 here, have generally been pretty shallow, I'm going to do my long right here at this low. And then I'm going to set my stop again below the 764. So I'm going to enter right here, just in case it stops at that support of the wave 4 of 1 lesser degree. So let's see if we can get filled on our long entry. I put a limit order right here, let's say. We have a 3-wave move down so far. It looks, I mean, if you're looking at the size comparison of this wave 2 compared to this wave 4, it doesn't look long enough yet. You see how they're not proportionally the same? I mean, the size of this so far, this correction, is more in comparison with these corrective waves of 1 lesser degree, of 2 lesser degree, really. So I'm expecting this is not the entire correction. I don't think that was the bottom before. So we got a 3-wave move down. And we might be getting an ABC with a 3-wave wave A. And then C down to our level. So it looks like we get a 3-wave B wave here, ABC. The C wave tends to equal about the same length as the A wave. So let's do that fib relationship. And as you can see, bam, nice confluence. The 382 retrace, the A equals C, and the 1.0 extension, all around the same level. Again, I know I said it happened here and I was looking for it, didn't quite get hit, but it's what I'm looking for again. My limit's just a tiny bit higher, just in case it doesn't come down quite that low. I'm going to put my limit at 812 to get filled. Well, my expectation is, you know, around let's say 8 to 7.8 is my expectation where C will stop. So I had mine at 815. Hopefully I got filled right there, but it looks like this is no, it goes a little higher. It could just be one of those spikes, but you know, maybe that was a 1, 2, 3, 4, 5. Oh, no, it came down further. So right now we're right at that support level we were watching. This is where I expect us to turn. This is where I expect the bottom to be. We have nice fib confluence here. It's coming back to where it should. If you notice on my composite index, I have some nice positive divergence. Technicals are fitting a 4th wave in that the low here is making a lower low on the MACD compared to the wave 2. The price is making a higher low. So what this usually does, it's hidden divergence, and it is bullish, So we are expecting another move up and a new high, but what it does is it's setting up negative divergence. So the MACD has to move up, travel a lot more. So usually it'll make a lower high here, and that'll confirm the top of our fifth wave, and that this is the move. The move is ending there. Again, I'm targeting the 2.0. I got long around 8.15. My stop is going to be set just below the 764, right down here. And I'm expecting to move up to the 2.0. So this is the risk reward that I'm looking at here. I'm looking at, a little more than a 2.5 point move, and I'm risking, less than $1. We'll say $1. I'm risking $1 for potentially close to $3 on the upside. That's a good risk-reward relationship to me. So I'm long. This is where I expect it to turn. Let's see if we get our turn here. A little spike, just a little lower. Again, I didn't get stopped out at all. Because my stop is just below the 764. You have to give it a little room, because sometimes it'll overshoot the fibs slightly. It happens. So give yourself a little bit of room when you're trading. Awesome. Sorry about this, guys. Shoot. That is not good. My platform just crashed. Sorry. All right. It'll take me just a second to get everything drawn again. All right, again, spiked just below our 1.0. This is where we were looking, and there was some nice fib confluence here, if you remember. Whoops, those are extensions. The 382 retracement of that third wave was right around the same level. The ABC, A equals C, was right around. If you saw it, hit the 1236. So it did hit a fib directly. It was past what we were expecting, but this is the general area we're looking for the turn. So far, it looks good. So I'm long from, I'm long from about 8.15, and my stop is just under the 764 I'm targeting. Right up here at the 2.0. See how this happens. So now that we have a nice move up, and it looks like we're consolidating correctly right here, this might be 1-2 of this fifth wave, I'm going to move my stop up to the bottom of this fourth wave. So just under this low now. So now I'm risking, 50 cents for still the potential almost $3. So whenever you can, you have to follow the price patterns to really get good stops. Whenever you can, you want to move your stop up. You want to reduce your risk as much as possible. So I'm looking for a 1-2 here. It looks like we might have a 1 in place. Let's try this high. Again, the 5-hour, the 618 general retracement levels to watch for wave 2. Let's see what we get on this one. Looks like a little spike there. This could be an ABC. You can see that. Again, corrective wave should be 3, generally. I'm still long. Maybe if you were a more conservative trader, this would be your entry point because you're waiting for that 1-2 up. So if you didn't take the entry point here, this is the next spot to do it. If you miss this low right here, this is the next spot you would do it. And it's not too far off. 15 cents higher than what I entered at. And again, your stop is going to be just below this low. Because if this is a 1 in wave 2, it can't retrace more than 100% of that wave 1. So it can't come down lower than this low. So that's where you set your stop. It's just below here. Don't set it right at the low because sometimes it'll hit or spike just a tiny bit and then reverse. And you'll get taken out. So give it a little bit of room, but just below the low. I don't understand the A equals C on wave 4 as C is much longer. If you notice, the C wave was around 1, 2, 3, 6. The length of the A wave. As I said, generally you're looking for the 1.0. That's the most common relationship between an A wave and a C wave. But they can extend further. Usually, if it exceeds the 1.0, the next one you'll watch is the 1382 for a C wave, and then the 1618 and then the 2.0. Those are the fibs to watch for a C wave. Is this the same setup that the length of the blue fifth wave should be around the length of the blue first wave? Right. Good point. It's another good fib to add on here that I hadn't done so yet. So yes, you can see here that the third wave was obviously the extended wave. It's much longer than the first wave. So we can do that same 1 equals 5 relationship. And as you can see, the 1.0 comes right around our target, which is at the 2.0 extension of the first wave, measured from the bottom of 2. So we're getting some nice clustering up here of fibs. This is some confluence. So again, it just increases the probability that this level is going to get hit. So let's go through this price a little more. A little spike just below the 618, but turned right at that level. Getting a nice strong move up. Hard to see it, but there's a tiny bit of divergence here. The composite index is what I look for, is what I use for retracement. Oh my God. Sorry, excuse me. What is going on? Man. I'm sorry, guys. I think it has something to do with GoToMeeting, and I was like going to the taskbar. That's what happened both times, and it froze. I'll make sure to try not to do that again. Whoops. Don't want you to see where it stops. I know that Avi has problems with GoToWebinar in his trade station, so apparently it just doesn't play well with other programs. Right. Okay. Again, we are about right here. This is our wave 1 and 2 of 5. Oh yeah, it spiked below. Okay, so now it looks like we have a bottom of 2. We're reacting strongly off that level. We can draw the next set of fibs for Pinball. We get some perfect confluence with the top of the 2.0 is what we're expecting as the top of a 5th wave when we're using Pinball, and it lines up with our larger top, our larger 2.0, right on the money. And the 1.0 extension, that wave 1 to wave 5 relationship is right at that level too, so it looks like a good high probability target. And then again, the fib movements that I'll be watching as the internal structure will be something like this. The 618, the 1236, pull back as a wave 4 to the 10 or the 764. Wave 5 of 3 to the 618. Wave 4 to pull back to the 1.0. And then our final 5th wave up to our target. So again, every time I see wave 1 and 2, I can draw these fibs and get the pinball already set up. And then I already have targets on a roadmap to watch. So again, I'm long here. My stop is just under this low. Once it exceeds this high, I can move it up to this low, this bottom of this wave 2. Looks like we got to the smaller one. If you remember, if it hits the 382, that's also a common target for wave 1 of 3. So it looks like that's where this one came to, is the 382. Pulled back. It was a pretty deep retracement, but it still held that low. So right now is when I can move my stop up. Because it hit the 382, generally you'll look for the 1.0 to get hit, but because the 2.0 up here has such nice confluence, I think this third wave will still come up to the 1236. Which looks like, oh, man, that's another extension. So it looks like we get the I'm not looking at the smaller time frames, and because it stopped at the 618, the 1618, maybe it looks like something like this. Maybe that 3rd and 4th wave are in there. Or this is the top of this TL3. But I'm long, and I don't have any reason right now to take off my position. Again, if it comes below the 618, back below the top of this wave 1, then that's when I can start to get worried. So maybe I move my stop up a little higher, just below this top at this point. Which it would protect a tiny bit of profit, because I entered right around here. But at least I wouldn't, be facing any sort of a loss. And I want to see this top here hit. Would be my target. I could have taken partial profits at the 1618 because it's a good idea, as I said before, to take partial profits at the top of wave 3. Because sometimes you don't get that fifth wave. Big spike. We have some divergence on our MACD. On this, we might have had a very small fifth wave. I would have set my limit to sell right here. So it looks like I would have gotten filled. And you do tend to see these spikes at the top. You'll see them at bottoms and tops. When you see a big spike and then fast reversal, you tend to see a top there. Looking at some questions here. Shift, when you are done with the setup, can you give a large view of the stock move? As some people like me like holding longer and wait for the higher profit. When you're using Fib Pinball as a trading strategy, you want to exit on that fifth wave. There's absolutely no reason to hold through this decline, in my opinion. That's just my personal strategy. Some people, because you're seeing a 5-wave move, that means that it is going to be in the same direction as the one larger degree trend. So that means you'll see a retrace, and there's a good chance you'll see another 5-wave, at least one more 5-wave move up after this retrace. But who knows? This retrace could come all the way back down below. If it's a corrective B wave or something, and this was only an A wave up, it could come all the way back below the original start of the move. And you just lost all of your profit on that first move. So it's just my personal approach to trading that I take profits on a fifth wave. I take partial profits in the top of a third, and then I'm out on that fifth wave. On that 2.0 extension, I'm out, unless it looks like it's really going to extend further. Even if it looks like it's going to extend further, I'm going to take more profit off the table, or at least more of my position off at the 2.0. So what about if we start at the beginning, wave 2? So yeah, if you started here and held through this wave 4, I would still take profits. Let's say we get a retrace that comes all the way down to the 618 of this whole move. Let's say it's a wave 2, though. Let's say you're going to get a really strong move after this. But look where that 618 is. That 618 is basically where you entered. So all that profit you gained holding through this move is gone. And especially if you're playing options, you don't want to, waste time decay through this decline. I think if you're going to use Fibonacci Pinball as a trading method, then that's generally the most sensible approach, and what I find a lot of Elliottians use. Take partial profits at the top of 3, the rest of your position at the top of 5. What time frame do you use for your trades? This looks like a 120-minute chart. Right, this is a 120-minute chart. I use all time frames. If I actually was trading this, I would have gone through on the smaller time frames and watched these substructure waves, more closely. But it depends, what I'm trading. If I'm looking at a 5-wave move that I'm trading that's going to be over months, like this one, then I'm obviously going to be looking at a 120-minute chart. If I'm doing a day trade in ES or something, then I'll be looking at a 2-minute or a 15-minute chart. So it all depends on the move, the trade you're looking at. If you're doing long swing trades, then you'll look at a longer term chart. If you're doing day trades, you got to look at a smaller time frame, because you got to look at the smaller internal wave structure. So you're looking for those 5 waves in each of these moves. So again, I would have been set my limit here. I would have been out, taking profits, spiked a little higher. You know, could even keep going and extend up here, but I hit my target. The trade worked out as I had planned. There's no reason to keep holding. Some people can fall. You know, you can follow up with a stop and put it just below this 4th wave if you want. You know, if you're trying to ride a move as far out as it can possibly go. But when it hits the target you were looking for originally, negative divergence is setting. I know it's not setting up in this MACD, but it is on these other 2 indicators. I think it's a good idea to take profits there. And as you can see, it's where price reverses back down. Is there any software available online that you can use for counts and practice that has Fib ratios built in already, like how you clicked and they showed up? Yeah. Let me go over. Oops. So what I use a lot is freestockcharts.com. You guys, can you see this? Just type yes if you can see it, because it's showing on the view that nothing's showing up. Okay, you can see it? Okay. So I use free stock charts, and I'll show you how to use the tools here. Let's just use Priceline for our example. So I already have this move labeled on Priceline. But if we were looking at to use the fibs, the fib extension tool is this. I know it says retracements, but you can use it as extensions too. So go to free stock charts, pull up a chart, add it to your watch list, pick the time frame you're looking at, and then use this Fibonacci retracement tool. And what you want to do for extensions is measure from the top of one to the bottom of one. It's about there. And then what you can do is you can drag it to the bottom of 2. So that's how you use it as a price extension tool. You just click on it and drag it to the bottom of 2. And then click on the bar again and go to edit. And then you can put in, unfortunately I haven't found a way, oh, there is a set as default. I just noticed that. But you have to type in, you know, the general ones you're looking for. We'll do the 1764. All right, this is a bad example because this is a really extended move, but we'll do it for this. We'll do the pinball in this move right here. So I'm going to measure from the top of this wave 1 to the bottom of the wave 1, and then drag it to the wave 2. And as you can see with this move in Priceline, the 3.0, or the wave 3 came up to, it looks like the 1764, so it overshot the 1618 just a little bit. But the 4th wave came back to the 1.0. You know, this is general pinball action. It looks like our wave 1 of 3 hit the 618, and then the 3 of 3, is around here at the 1, 2, 3, 6. So you can use free stock charts as a free resource to pull up charts and then do the Fibonacci pinball with. Is that a good explanation? Are there any questions about how to use this service? Is there a point after what you have labeled as 3 where you will have to consider that the move up is over and that your labeling has somehow missed a wave and that 3 was really a 5? So going back to this example, that invalidation level is the 618. So when this, let's say this wave 4 started retracing and it came below the 618, the second that happens, and it doesn't reverse up immediately, the second it comes back that low, that's a red flag. The 618 is always what you want to be watching. If it retraces back below that, then you're most likely, I'd say 80% of the time, your account's about to be invalidated and price is going to reverse further back down. Are there any other questions? Roy, did you have your hand up? You have a mic, Roy? And looking at a stock chart that has not been previously analyzed, how do you determine the wave structure, degrees lesser, greater, etc.? Do you have an example? Do you have a symbol that I'll look at? Just pick one. Well, I want to find one that's a good example that I haven't done any analysis on. BTU. These ones are all really corrective looking. Okay, let's do Crocs. I like that one. All right, so what I generally do when I'm starting with a chart from scratch is I will look at as much data as I have available. So in this case, it looks like we have history going back to 06. I'm going to look a little further closer. And what it looks like is a strong impulsive move down, if you can see here. So we have a high, and we have an impulsive move down into this low, and then we have what looks like a 5-wave structure up, if you can see this. 1, 2, 3, 4, 5. And then what we have here looks like a triangle, a descending triangle. So generally, when you have an impulse wave, which this looks like, it's going to be in the same direction as the trend of one larger degree. So that means this move up should be corrective, and we should expect another move down, which for Crocs looks like it'll put it out of business. So my expectation is that Crocs will not be in business forever. But the idea is that, we could still trade this corrective move, this B wave, because this first move down would be an A wave. Corrections are 3-wave moves. So this would be the A wave, and then we're looking for a B wave here. So we draw some retracement fibs. Because this is a 5-wave move, remember that means it's in the direction of the trend of one larger degree. So we should see another move up here. to complete this corrective portion. So if this is an A, this B wave still needs a C up, which is why if you've followed any of my analysis, I like Crocs. And I think that once this bottoms, it'll be a nice trade. So this would be my analysis of Crocs. Simple and dirty. I didn't take much time on it. But my expectation is that we'll see, even see if there's a relationship here from the A and the C. My expectation is that we'll get a move. Oops. Ugh. Come on. A move to around here, at least the 1-0. So that's what I do when I'm looking at a chart from scratch. I go to the most data I can see, so the highest time frame, try to get a sense of what the larger degree pattern is, what the trend is. You know, I'll say the long-term trend in this chart is down because we have a strong wave move here, and then the intermediate term trend is up because we have a 5-wave move here. So we should see one more 5-wave move and then another decline to resume this larger degree trend. How long the midterm? I'm basing this off of the idea that 5-wave move has to be in the direction of the trend in one larger degree. So because we have one 5-wave move here and corrective overlap, it means that we should see another move up, another 5-wave move up as a C wave. So that's what I'm talking about when I'm looking at trends. And because we had what should be a 5-wave move down, after this completes, this high completes, we should see another move down from there. Oh, you're asking actual timing. Again, not one of the strong points of EW, but you know, general rules you can use is look at the length that the A wave took. Almost 3 years, so I'd expect the C wave, wherever this B bottoms, to take almost 3 years. It could take less. It could take, you know, 6.18% of that time, but timing's not really a strong point of EW. What is your take on the weekly chart for XPX? Do you see the move down 2009 as an A wave? Rather than going over individual charts, if you can ask that on the board, and I'll post my big picture. But rather than sitting here and doing analysis of a bunch of different charts, if there are any questions concerning how to do the analysis, ask that question on the board, and I'll post my big picture chart. We can discuss it there. Any other questions? Again, ask specific stock questions on the trading in the trading room, and I'll try to answer them there. At which point you can say C start, and C will be a 5-wave. What I'm looking for, you're talking about Crocs? What I'm looking for is, since I think this is a descending triangle, I mean, I put this analysis out earlier that I thought it was an A, B, C, D, E already complete at this low, and it still could be the case. We still could be breaking out here. You see it broke above that yearly downtrend line. But really, once this high is taken out, and I can count 5 waves up, that 3-wave retrace following is a very strong buy in my opinion. So, and this looks like a zigzag. So you'd get a 5-wave A wave and then a 5-wave C wave. C wave should always be 5 waves. How do divergences at different time scales relate to turns of various different degrees? So when you're looking at a time scale that shows the entire 5-wave move you're looking at, or corrective move you're looking at, that's where you should see the divergences. So even though, let's say on this third wave of A, even though you'll see some divergences here on a smaller time frame, you don't notice them on this larger time frame because it's lost in this, because we're looking at such a higher time frame. But we should see divergence on the C wave because we're looking at this whole structure here. So if I were to zoom in, well, that's a little too much. Yeah, stock charts, you can't go back farther on smaller time frames, unfortunately. Yeah, and you don't even see it on this. But I'll bet if I was looking at this as it happened, this is actually a pretty strong move. So maybe it didn't have divergence, but generally you want to just look at, the time frame that's filling your chart with the pattern you're looking at. Can you have a pinball example on a truncated fifth wave? I'll be going over the next webinar. I'm going to focus mainly on patterns. That'll be the topic. So I'll cover all the patterns again, and even some that I didn't cover in the first one. I'll go over truncated fifth waves, but the truncated fifth wave just means that it didn't exceed the top of the preceding third wave. So they're really hard to rely on for trading purposes, but they happen, so you have to be aware of them. And that just means that there's no fib that it'll stop at. It won't exceed the third wave high, is what a truncated fifth wave is. Why arithmetic scale instead of log? Let's look at a log. I personally, I have conversations with Roy about this a lot. I like looking at arithmetic for some reason. It's, it hasn't really strayed me wrong yet. But, looking at this log, then maybe this is a fourth wave triangle. And I'm still expecting a move up, and it should still, be at that same target I was looking for, but it could be a fourth wave instead of a B wave. Who knows? It's just personal preference for me. I look at log too, so I'll look at the counts on both, but most of mine are done on arithmetic scale. At the very beginning of the webinar where you showed us the final move down, the wave 5 of C looks like 3 waves, rather than 5 waves of a diagonal. It seems to happen a lot when we do not get that final wave down, like it happened in ES yesterday. Would you please comment on how frequently this happens? You're talking about this? Yeah, I noticed that when I was looking at the chart earlier too. This doesn't look like. I mean, it could be a diagonal, but the problem is this third wave might be the shortest, which is not supposed to happen. Yeah, it's shorter than that first wave. Yeah, the third wave in this is the shortest. I know it's not the best example. How I would count this personally is I would say this might have been a really truncated C wave in the fourth wave. So this is an A, B, C, and this is actually where that ending diagonal starts. It's not something I would have picked up on until after it happened. But sometimes the market just doesn't give you what you expect or want. Looks similar to the 3-minute ES now that we moved up from. I'm not sure what pattern you're talking about. Second part, how do you adjust for wave 4 with a trailing stop? I tend to use hard stops instead of trailing stops, so maybe you can ask somebody if they use that trailing stop strategy. Sometimes I'll set a trailing stop on, the end of a fifth wave move. But I tend to just, manually move my stops up to the support levels. So, on a wave 1 and 2, I'll set it below the 2. And yeah, so I don't know if I can really answer that since I don't use trailing stops very often. If possible, can you explain your thought on today's Apple? Again, individual stock questions, ask on the trading room, and I'll answer from there. A truncated fifth wave we have moved up from today, and ES was what I was referring to. It was a mess down there. I agree. It wasn't the highest probability outcome, but that doesn't mean it's impossible. So right, if we just rally from here, then we had a truncated fifth in ES. If we get 5 waves up and just continue up. Again, like I said, it's not something that you want to rely on heavily for trading, but they happen, so you have to watch out for them. Right, nothing is impossible. Any other questions? No? Do I suggest lines or candles to build charts? I don't suggest either. I suggest using the open, high, lows, close bars. Personal preference, I guess, I just find these the easiest to read waves from. Like Avi, I can't do it very well on a candle chart. I just don't see, the internal wave structures very well. Especially because I think with candles, especially because people use, such spread out candles because they're looking, at the candle patterns, and you can't see them if they're all squashed together. But when that happens, you're missing, the internal price swings of that wave. You can't see them. So you don't know if it's a 5-wave or 3-wave pattern. So that's why I use the open, high, lows, close bars. What fib to expect when 3 only hits the 1382 instead of the 1618? So if this 3 hit at the 1382, then generally the 5th wave will target the 1618 or 1764. And that usually happens when your wave 1 of 3 hits the 382, your wave 3 of 3 hits the 10, and your wave 5 of 3 hits the 1382. Generally, your target for the 5th wave will be the 1764. May fall short at the 1618. I'd ask, but I think you were on the Crocs chart. At the wave labeled 3, if we dropped below the 0.618, would 3 then likely have been C and not a 1, 2, 3, but an ABC? Right. So if we stopped here and just collapsed below the 618 and eventually took out this high, then this probably would count best as an AB 1, 2, 3, 4, 5, C. So yeah, if you don't get 5 waves and you only get 3, you're looking at a corrective pattern. Sometimes in a diagonal you'll get overlap of these two and it'll come below here. But that means that these internal waves of 1, 3, and 5 would have been 3-wave moves. So diagonals have 3-wave internal moves all the way through. And because we got 5 here, that's why we're expecting 4 to hold to support. Right, it's the alternate count you should keep your eye on. So yeah, you should always be looking, for other possibilities just in case your primary count breaks down, you have something to switch to, or at least expect later. Any other questions? All right, yeah, thank you guys. Can I explain ABC again? So an ABC is a 3-wave move. We'll use this for an example. An ABC is a corrective pattern, which means it's correcting the larger trend, or the trend of one larger degree. So in this case, that would be this trend moving up to this 3rd wave. So this fourth wave is 3 waves. A, B, C. And the A wave can either be 5 waves in a zigzag or 3 waves in a flat. If you see 3 waves in the A wave, it means that the B wave usually retraces at least to the 618 and can even exceed the prior high. And then the C wave should always be a 5-wave move. If it's not, then you're looking at a more complex pattern, which is a double zigzag or a triple zigzag. So I'm going to go over those in the next webinar because I'll be going over patterns. Earlier on, you showed 2 charts with the standard and non-standard fib levels of a 5-wave move. Where is that available and printed from early? You showed 2 charts with the standard and non-standard fib levels on a 5-wave move. Oh, you just said that twice. Those, I'll post the link, but they're actually in the library in the trading room. I believe both those pictures are there for that fib pinball. You're talking about this picture? If not, I can post them and you can download and print them. If you can't find them and I don't post them, just remind me. Send me a PM or just post in the trading room and I can post them for you. Are A 3 waves or 5 waves more common? Most standard and common is a zigzag, which would be 5, 3, 5. So the A wave would be 5 waves. I haven't really run any statistics on it. Usually I'm just looking at guidelines such as alteration. So if that second wave, there tends to be alteration between the corrective pattern of this second wave and this fourth wave. So if this second wave was a zigzag with a 5-wave A wave and a 3-wave B wave and then a 5-wave C wave, I would be looking for either a 3-wave A wave here that was a flat or maybe a triangle or something. So that, I mean, I don't know about statistics of how often, it's either 5 or 3, but you can use guidelines like that to help you expect what kind of move it's going to be. Any other questions? Sometimes an ABC can look indistinguishable from a 5-wave move. Look at wave 2, red, within wave 3. These trip me up all the time as I'm expecting 5, 3, 5 correction and waiting for the second 5 waves of C. You're right. You're talking about this wave right here? It happens. You're right. I'm sure if I broke this down, though, if I was looking at a smaller time frame, it would look more obvious that this is an A wave, B, and then C. Give it a second to load. Are there any questions I can answer while it's loading? Any other questions? But yeah, I know what you mean. Man, my software is not cooperating very well tonight. Just trying to load a smaller time frame. I don't know if you can see it here, but this looks like 3 waves as an A, and then a B, and then 1, 2, 3, 4, 5 as the C. That's how I would count it. So generally what you'll look for is like a 3-wave start to that move. When you see a 3-wave start to what looks like it could be 5 waves, then that's when you have to be cautious. So I guess that would be my rule, is look for if that supposed first wave only has 3 waves, that's your red flag. Also, I mean, we're expecting a corrective move here. It came down, it retraced pretty far. If there was another B wave up and then another C wave down, that would just look disproportional in size and the amount it retraced. So it's just general things like that you should watch for. Can a diagonal be detected earlier than the fourth wave coming into the territory of wave 1? The diagonal can be detected earlier when these substructures are 3 waves. So there's a 3-wave wave 1, and then 2 usually retraces a lot more. And then you get a 3-wave wave 3, but it does, and it still looks bullish, and you're expecting, you know, a move up from there, a 5-wave move, and that's when you are looking for a diagonal to happen. Is the internal wave structure should be 3 waves for the wave 1, 2, 3, 4, and 5. Any other questions? If there are no more questions, then I am going to say goodnight and end the webinar here. I hope everybody enjoyed it. It will be downloadable probably tomorrow at some point. And I hope you guys learned some stuff. And if there's any suggestions you want to shoot me about future webinars, go ahead and either email me or PM me or just post on the board. You need a tutorial to use the charting software? I can try to go over it in more detail in the next one. For free stock charts at least. So yeah, any recommendations you guys have, any questions you didn't think about, just go ahead and either email me, PM me, or just post them on the trading room. Hope everybody has a good night, and I hope you enjoy the webinar. Thanks.